sharing with you exactly what happened this week. Okay, so first of all, on Monday we caught an Aussie dollar setup. Okay, so this is week 13. After this yellow line, vertical line before that is week 12. So on Friday the 17th, we see that price traded above Thursday's high and Wednesday's high and Monday's high. Okay, so we see that Friday broke structure to the upside, clearly bullish. All right, we were following a trend. So come Monday, price returns to my point of interest. So what is in my point of interest? First of all, I purchased the move back up at a premium price. Okay, the Fibonacci told me that we are at a premium price. All right, so between 0.618 and 0.78 is where I took my setup. Okay, so that's the Fibonacci. In my point of interest, this rectangle, we also get my 200 EMA. Okay, like I always say, it's not easy for price to just trade through your EMA. There's my 200 EMA over there. I took that entry right over there, 1 to 2. My point of interest, we also get the close of Thursday and the opening of Friday. Okay, this is a swing low of Friday and the close of Thursday price action. And we have an order block that price only fiddled with once. Okay, only retested that order block once, maybe not even came close. It held up though. Took a nice 1 to 2. I have dropped down to the 30 minutes. Looking at the 30 minutes, we also see that my 200 AMA is also in my point of interest. Okay, and price was bouncing off there. It found support around my 200 EMA, right? And then look at this swing, guys. This swing happened at about 5:30 my time zone. Okay, so it's ideal for price to have to take liquidity and then go up. Okay, I love seeing this because my point of interest is below the liquidity that we find below the swing low. Okay, so price takes it and then trades above. We see here we close imbalance on the 30 minutes. Okay, there was some imbalance here. Maybe we didn't close all of it, but I also trade imbalance. So that's why my point of interest was so strong. Okay, this is a strong point of interest, yet it paid off. So when price got here, I identified special divergence. Once special divergence was identified, I took the position and I didn't even have to hold long. Hey, same day at about 4 hours down at the setup. Easy setup, beautiful way to start the week. Tuesday morning came. This is what I call a restless trend setup. Okay, it didn't pay off. London session gave me a beating, but this is what I call a restless trend setup. Okay, so I take my Fibonacci from the low of the previous day to the high, and then I take this entry from the 0.236 level. Okay, and my stop loss is below the 0.382, the swing low there. Okay, so I risk 30 pips. So around here at the 0.38, it was about 27 pips. So I took it down to make it 30 pips to please my risk appetite. Okay, but that didn't work out. The very first hour of London Open, I had already lost, but still I want to explain why I took this trade from this zone and not from the bottom like I usually do. So as you can see, this is week 13. Monday opens and we're bullish straight off the bat. We take out the highs of last week. Okay, we continue with the trend. We break structure. We make new highs on Monday. Okay, I identify special divergence here. Right over here, I identify special divergence. It didn't hold up. There is an order block over here that also didn't hold up. But just to explain what I was thinking, I was anticipating the trend to continue restlessly, like I call it, the restless trend setup. Okay, but that didn't happen, and we took a loss 1 to 2. I only trade a maximum of twice a day. I did take another setup that day, but when I lose, I can only lose half of what I can make. Okay, so if I lose London session and I win New York session, I'm already in profit. Okay, so that's how I approach my risk management, because I know I cannot win every time. And yes, I do take a loss, but as long as I take a loss following my rules, guys, we broke structure. There was special divergence. The fib levels were aligning, and look at this move up here. I mean, look at this move from Asian session. Okay, to me it looked exhausted compared to this momentum moving up. I saw a little bit of exhaustion here, okay, from the sellers. Thus I anticipated it to trend up, but it didn't. Overall the direction was right, but that doesn't count. My stop loss is there to show me that I was wrong, to take the loss, come back another day or another session. So this was Tuesday's New York session setup. Okay, this pair actually gave me 2 setups this week so far. Can give me another one, I don't know. Okay, but straight off the bat, come Monday, I realized that we traded higher than week 12, right? We broke structure, we're bullish, we follow trends. Okay, that's what I do. Let me say I follow trends like a pro. Okay, that's what I aspire to do. I want to follow the trend. Okay, in this zone was a swing low that broke structure. It doesn't get easier than that. Okay, in my zone we have an order block, an opening price. It's a strong zone. All right, the Fibonacci tells me it's premium price. It's probably the 0.7 or the 0.6 fib level. Okay, so from the low to the high of Monday, yeah, 0.7. So come Tuesday, I wait for price to come to my point of interest. It does that, and it does that at 3 o'clock. Okay, so whenever it's New York session, I don't just jump into the trade as soon as it touches my point of interest. No, I want it to come in my point of interest, then find its way out. Okay, so even if it had taken liquidity from the previous day's high, I mean low, which it could have easily done, I still would have wanted to see it trade out. Okay, so price returns here on the 15 minutes. I took my entry right there, a nice 1 to 2. I took profit on Wednesday over here with this nice bullish momentum up. Okay, and looking at the 30 minutes, there was no imbalance to be closed. Awesome, but my 200 EMA was in my zone. Okay, I was watching this with close eyes. Okay, with the eyes of the eagle. Look at how it finds support at my 200 EMA. When I saw that and I saw price bouncing back up, it made its way out of my point of interest, and then at 4 o'clock, as soon as price touched my rectangle again, I took that buy because I had identified special divergence on 2 time frames, on the 30 minutes and on the hour. So I was comfortable with that, and I was comfortable with the risk. Okay, even though there was momentum coming down. I knew that I was comfortable with the risk. I'm okay with what I'm risking. So a loss is a loss and I'll take it. But it was a win, but only to find out we would cash in the next day. So that was Tuesday setups for you. Wednesday, no setup, we didn't trade. But on Thursday, I caught two beautiful moves. Okay, this is a setup that I call a trend in a trend. Okay, so you can clearly see this week we've been bullish on Euro USD. Clearly bullish, clearly bullish, clearly bullish. A lot of people would be wondering why I sold. Okay, but this is a trend in a trend, and I'm gonna explain why. The zone that I sold from, okay, I identified special divergence, right? And price went into my zone. I waited for it to come out of my zone. On its way out, I took the sell, okay? But now what is the zone and why am I saying this is a trend in a trend setup? So looking at the hour, obviously you can use the 4 hour for less congestion. But for the sake of doing this, I'm just gonna use the 1 hour. On February the 3rd, right, bullish moves took over this pair, right? Okay, so on February the 3rd, it was a Friday, we broke lows of that Tuesday that week, and we also broke weekly lows, okay, the following week. But the move originated here from this order block here, from this swing high. Okay, this is where the bearish move originated from. So it took it a couple of weeks for price to return to the point of origin of the trend. It's easy for price to just return to the point of origin, but when it returns there, you're looking for confluence, guys. You're looking for things that are going to tell you that, hey, we are going to reverse or we are going to continue this trend. Okay, I identify special divergence over there. Right, this was a Friday. There's a nice order block over there. Okay, we broke structure as I said. So this was a very strong zone for me. On this day, there was also fundamentals that had an influence on the market. So I was like, yep, this is what I call a trend in a trend setup. Okay, there was confluence, price returns to an important swing. Price must enter my point of interest, and on its way out is when I take my entry. Okay, beautiful 1 to 2. This was New York sessions setup for Thursday. Okay, so just to explain the reason behind the trade. This low breaks structure to the left. It takes out Tuesday's high and Monday's high. But importantly, it takes out liquidity for December's high, guys. December 2022, it trades into that zone, takes some liquidity. This rectangle, this December's high, guys, highlighted in gold. So price takes that out on Wednesday, okay, as well as Asian session Thursday. So when it returns to the origin low, to the low that made new highs, I'm interested, okay, but only if I identify special divergence. Fortunately for me, it was there. It took the setup, beautiful 1 to 2. Imbalance was closed. I did want price to trade below this low, okay, to take some liquidity and then make its way back out, but it didn't. I just took the setup. It was an impulsive setup because I know GBP CAD, I know its behavior, so I was confident with it. Okay, this zone over here is a very strong zone. There's an order block. It's the opening price of Thursday, it's the closing price of Tuesday, and it's opening price of the week. Okay, and it's also break of structure of of week 12. So all of that in this zone, my 200 EMA was approaching. I was very confident with that. I've dropped down to the 30 minutes where you can also see my 200 EMA. 200 EMA, guys, it's very underrated. Okay, your strategy shouldn't be based on just an EMA alone. It must be a confluence tool, guys. Okay, and it plays the role of confluence in my strategy. So on the 30 minutes, we find the 200 EMA and find support there. That is when I will take an impulsive entry when price is finding support at an EMA in my point of interest. So at 2:30, price comes into my zone. Okay, I don't take the entry then. I only take it at 4:30 because I'm anticipating that price will reverse with London close volume, and I'll take the win. Okay, beautiful 1 to 2 as always. And this is just how we roll. Please don't forget to like and subscribe if you feel like your time was well spent. Kindly also check me out on socials at pieinthesky.strategy. If you want to learn more about special diversions and how to utilize the dollar index to increase your probability of executing a winning trade, you can check out my course, link in the description below. In the course, I teach everything about my strategy. It's the only strategy I use, and I leave no stone unturned. Full transparency, and you'll definitely learn something. You can also check out my psychology course, where I teach advanced trading rules that fix the psychological challenges that traders come across. And if you're in search for a trusted broker, check out the broker I use for my personal accounts. Link in the description below. They're regulated, no hassles, super low spreads, 0 swaps, 0% commissions, instant withdrawals, and you can even withdraw on the weekends. Until next time, guys, always remember the pie in the sky is profit at first bite.